Hi, this is Elliot Wave Sage. Let's do a quick market update. Like always, none of this is financial advice. Always do what's best for you. So the Fed meeting is over. So what is going on in the market? So my last update, I mentioned we were going to get this pullback in wave two. We could have entered the announcement in where we are currently. It didn't look like that happened, so we sold into the news. But again, guys, this is just another dip to buy. It's just another dip to buy. It's not the great crash isn't starting. It's just a retrace of this impulse. So we have a nice three-wave move. We're in a buy area this morning, and it looks like we're bouncing to 485. Looks like the futures are up. So it looks like you may have already missed the dip. And that's what happens on these kind of flash crash like scenarios. You have to stick your head out, neck out and buy it. But this one actually had a setup on close. So this was actually a really easy buy yesterday with this three-wave move. This was just textbook. So now we'll form either a new connector or we'll go to new highs from here. And I think if we go to new highs, a lot of people are going to be scratching their heads because they have, that we're going like that. But that's not going to happen, guys. So here we are. We're going to bounce now. This bounce could fail and give another swing lower. So always keep that in mind. But that would just be another buy-in opportunity, right? But the setup is lost. Like you don't go in today and buy the market if it's open up at 485. Now if we for some reason open at 483, 481, then yeah, then that's an area to be dip buy. Triple Qs. So here you can see you have three, a connector, and three. So same thing. Triple Qs should be rallying from here. Now, what's interesting here is we broke through this area. We broke through this area. Now, what that typically means is we could bounce and fail. The other alternative is it's a five-wave move down. So the setup in technology isn't as good because you can easily label that like an ABC. In a five-wave move, the other alternative is it is just a deep WXY that's done here. Let's take a look. It would be nice to get that 4-hour reset. So yeah, it definitely could bounce and fail again. Can definitely bounce and fail again. The the Dow Jones, three waves. Again, this is a pretty deep reaction, which also signifies a potential bounce and a failure coming. But this doesn't have to happen, right? So just keep that in mind. But that's what that signifies. If we go to the futures, sometimes we can get clues. Obviously, 4-minute connector for this three-wave move down. So either the two's done here, or it has another leg lower after a spike and another leg. ES futures. I look at this. To me, there's your connector right there. So again, ES looks like it has a better tradable setup for whatever reason than the others. NASDAQ, same structure, three waves, pretty deep, could bounce and fail. You don't really see the five-wave here. The Russell, cash market Russell. So this is tricky because this could be a flat. I'll put the one here. But I think the one would be better here with this 1, 2, 3, 4, 5. Like a 1, 2, 3, 4, 5. And again, in a three-wave move. So again, we could look for a bounce and failure. So looking across the market, it looks like the market should have some kind of relief rally today. And then it's really questionable if we get another leg lower or not. We don't have to get that because you already have a three-wave, move down. But whatever happens is these are viable dips, right? These are viable dips, and then this is what I'm looking at. Obviously, the key pivot is right here, and then the SPY much further down. So, but this is a technical line in the sand. The previous all-time highs, and the triple Qs previous all-time highs. Some technical support here. So we'll see if it can bounce and fail. But like I said, it actually could be finished. It could be finished. We just don't know. But the SPY gave you a really good trade setup yesterday. We'll see what happens in the market. Bitcoin finishing the first impulse off the low. I believe that low is now in. A nice 5-wave move. And this gave you a great entry, and it still is giving it to you right here. So again, it can always bounce and fail, but there should be a bounce or it could be the bottom. Oil hit the rejection areas, turning lower. So oil is a wild card in how it will correlate with the market. So it's a wild card. It could easily continue the dump. We'll see what oil does. Gold is really confused, but it's clearly the cycle. This cycle is done, and we're in a new uptrend. We're in a new uptrend. Tough to label since you did come down in 3. There's a chance that we could have 5 up in an A, B, C with 2. So like a 1, 2, 1, 2, 1, 2. Very bullish count. And silver, I kind of have that count right now in a 1, and now we're in this 2-wave. So silver, looks like to me there's your first swing, a connector, and your next swing. So we'll see if it can find some support here in this area, 22.42. And you also got this really nice inverse head and shoulders forming. You see that pattern? Again, just kind of trade-in 101. This would be the area to buy it, to play for to see if this pattern can finish and break out. And a breakout would mean a breakout of the downtrend line that we've been in for quite a while. The other thing to keep in mind with silver, I was looking at the silver ETF, SLV, has an interesting look to the overall chart. You got this bull flag, okay? You try to break out, it's finding support on the edge of the flag, and breaks out, and now we did another back test. This is very bullish. The market is having trouble going back into the flag. So if this flag is ready to break out, the measured move gets you into these areas, the $30 areas of silver. That should be weak for the dollar, which is bullish for the market overall. That's why if you're bearish for the market, silver is telling you otherwise. Silver is telling you not to be too bearish, because this doesn't look too bearish to me, this setup, given what I'm seeing on the SLV with this bull flag. Really what it is a bull flag breakout that's continuing to consolidate. In all this consolidation, at some point, one side of the market will give up and there'll be an explosion, either higher or of course lower. I'm willing to bet higher, and that's where my bet is. And if it is higher, more than likely the indices will go right with it. So just keep that in mind. All right. So then the dollar index, tough to say if this is a connector. If it is, we go higher. The market obviously should drop. So you have to really understand, where is the connector? Or is this just 5 waves off the low and really you have a flat? And you put A here. So the dollar, I'm not going to label it, only because it's got a pretty too many possibilities. Uh, it's really not a connector. It's really just still an impulse. So this is really just one impulse off of it. So I think if you put A here, you're going to have to do something like that, and then get a pullback. You have to think the market will do something like that. That's one option. The other option is you put B here and put A there. So it's tough to say where we're going to head on the dollar index, but we do need to keep in mind that we could get this breakout. So this would be bearish for the market. So the dollar index is concerning if you're a bull, but in the market. But it's given what happened yesterday, you didn't really get that surge higher, right? I mean, we did. We're still just sideways. We never got a new, got a break out. And we still respected the high here that we have right here. So to me, the dollar index, I'm still going to label it in a three-wave move. But if we do take that high out, then it's 5 up, and then it could do those two options. Either it will finish an impulse and have a massive downside move, or it will really drop and then spike again later. The 10-year, so the 10-year was concerning, right? We thought it could break higher, and it actually didn't. So the 2 is in. So you would think this would be bullish for the market, and I do believe at some point it will be. And I think this has made the sell-in not be as bad as it could have been, or the indices drop as much as it could have yesterday. But this is where we are. So we should be heading lower in rates. The VIX, I haven't looked at the VIX in a while. It's interesting, little spike here. So you have 3, so maybe you're forming a connector, some kind of triangle, kind of connector wave in the VIX. Some kind of consolidation. We'll have to wait and see how this plays out. Something like that. And then you get a much bigger spike and maybe a bigger sell-off, and this could actually be the start of wave B, wave C in the indices. Like when we get to here, that could be when we're trading finally in this area, and then we get B set. Then the VIX can have that nice push higher. But we'll keep an eye on it. I don't like this the way it looks, but I'm just kind of speculating what I think the pattern could morph into. So that's what I look at for the market. So definitely should bounce today, and then we either get another swing lower, or this is the bottom and you miss the dip, and it's over and that's it, and we go to a wave 3. So the other thing is let's look at some of the technology stocks, because I know everybody loves technology. So Tesla, we had to change this. I don't remember if I gave this video or not, but to this WXY and an ABC move. So now I'm looking for a little bit deeper, downside. Now let's see what if we don't go down from here, we just go up. Well then what we're looking at is an impulse down in 5. So you have 5, 3, 3. So to me, it could become an ABC. So we would have to change this connector around completely, and you would actually indicate the stock is trending lower. It's like impulsing down. Bulls don't want to hear that. It would be actually pretty bearish to have a bounce and not get this other leg. This would be a more corrective pattern if we actually rally from here Now we're starting to look at a series of like 1, 2s, or just a 1 and a really higher degree run-in flat. So we need to keep an eye on it, but there's really no more setup in this stock to trade. I wouldn't trade it now, given what happens. But I wouldn't. But I do think it has another like lower coming. Um, let's take a look at some of these others. I don't have my chart on Amazon updated, so we'll look at that later. AMD. So AMD is in the buy area. That was one that could have been bought yesterday. Three-wave move. It looks like it's wave 4. One more wave 5. That's what it looks like to me. This is the danger zone. Probably $200, right? That's probably where it's going. Apple. Let's look at Apple. Apple's tricky. I do believe it's in this 1, 2, and now we're in a 2 wave. So I do believe this needs to come down a little bit more. And then Apple could be a dip buy opportunity right here at 176.86 in this area. Right there. So there's a potential dip buy in Apple. Then Nvidia. Looks like it's doing the flat for wave 4. So kind of tricky, right? Now, could wave 4 be done here? I did mention in my video it could be very shallow, right? It doesn't have to go this deep. But, you got to be careful if you're trying to play the upside in it because, it could easily have a bigger dump coming. Something like this in this C leg, so just be careful. But again, this is like AMD a wave 4, and you still have 5. Now, could that be 4 and this be 5? It's possible, but when I look at this wave, it looks like a 3-wave move and not 5 waves off the low. And it doesn't look like it went high enough. So to me, this is kind of what I'm thinking for AMD right now. That's what I'm going with for now. Then, other than that, that's really all I'm looking at. So yeah, it was kind of some pretty heavy selling, yesterday, which is good. And then let's look at commodities and just take a look at how they're trading. Keeping an eye on Chevron. Chevron came close to the buy-in area here, and it did break that low. So there's a chance that 5 could be done. But if it were to push down into this area, that would be a good buy. XLE is kind of in an area too where it could find support. XOM, it did break that high, broke that low. So XOM may be finished. So what does that tell? What does that tell me? Tell me energy producers could be bullish, right? Now, what if that doesn't happen? Well, then we have a much more bearish setup because then you have a 1, 2, and then these targets aren't irrelevant anymore. So like a stock like Exxon, if it can't find support here at 95.61, then it's going to turn into a much deeper downturn like that. And if oil is going to go down like I have it, this is probably where we're looking at it. So I'm just kind of thinking out loud here what I'm looking for, something like this. And then the OIH, still looking for a flat, which would put us down to 210. So yeah, see, I still think, so I think overall energy and Chevron, should come down. So I do think energy still has more downside, which means oil, should also help go down. All right, guys, that's all I got today. So overall, I believe the market still has more upside. I believe silver is sending you the warning sign that the market could be more bullish than you realize, given the inverse head and shoulders. This actually is a great look of a potential reversal. Of course, it could be lost if we break 2186. Nothing's guaranteed, right? Then this would be a connector for this 3-leg move, and then that would probably be very bearish for the market and make the dollar surge higher. So keep an eye on that. I think silver is very important to understand where the market's going. I do like this inverse head and shoulders. If we do get that breakout and follow through out, more than likely the indices are also going to follow through, and that should generate some nice upside momentum for the market, which is via through the dollar weakness, which is what silver would need to see to get through that. So that's what I got in my my forecast, and I think that's all I want to cover. So anyway, guys, good luck trading. And yeah, and like I said, there will be an opportunity for a much more larger sell-off coming, even a catastrophic crash, but it's not now. Now's not the time. It's not happening yet. It's not happening now. That moment comes later, but as you can see, with each passing day, we're getting closer and closer to that moment. And just to keep in mind, I was looking at the Dow futures. We almost got into the danger area in the Dow futures, and the danger area, if I remember right, was established by the Fibonacci extension. This is if we're not getting the moon boy scenario, you can see. So if we don't get moon boy, then we should get a massive rejection in this area. It should struggle. It should be really choppy, and in fact, it may be labeled even a 3, 4, 5. So perhaps we get a fifth wave extension, get the Dow to finish up, and then that's it. So this was interesting just to keep in mind, you know, where we are. And if we also look, we're very close, and this is a pretty big sell-off, right? This is also 3 waves. So what if, just hypothetically, what if we're still in B, right? And we come all the way back. Again, this is Dow futures. The Dow has a different look, right? Different look. That's clearly 5 waves. So the Dow would do something different. It would go deeper in 2. But just looking at the futures, and so the futures is kind of out of sync with the Dow, in my opinion, but they usually sync back up. So we'll have to wait and see how that goes. But anyway, once we're in these danger areas, we'll know whether we get moon boy or we get a massive sell-off. But until then, the market should continue higher and find support, in my opinion. But you'll have to do what's best for you. And I hope things work out for you trading. And yeah, if we do get moon boy, you know, we're looking at blowing through this box, and it would be a huge melt up. And of course, I know people hate when I say that. For some reason, I don't know. Again, I don't know why everyone wants the market to collapse. It's kind of head scratching, because I thought most people are invested, but they do. They hate when I say moon boy and melt up. But you guys got to understand, that's still technically possible. Moon boy is possible. It's a scenario that has not been eliminated. No matter how much you think it's stupid to think, moon boy has not been eliminated, guys. I can easily put the wave 5 here and then call this a 2. I could. Or I could do something like this. Even better, maybe. And then make that a 2. 1, 2, 1, 2. 1, 2, 1, 2. Right? And this makes sense. You broke the 4 wave. Now, this took a lot more, took more time, more complexity. This was more straight down and V bottom. This is not typical of a wave 2. That's why I don't put that there. But this is either the grand super cycle's finished and it's an A, B, C, and C goes like that, and this is correcting the whole grand super cycle of the indices. And yeah, either we break here, or you get the 1 in a million, lights out, nuclear war crash that I know some people think could happen. and a massive expanded flat that will write books about, or it's a truncation, or if none of this, it's moon boy, and you have an irregular correction that doesn't match the typical corrections, which is fine because it's so bullish, right? So you have this 1 2 1 2 1 2 1 2, and if you look, each two is getting less and less complicated. So I do think, if moon boy is going to happen, we're going to know pretty soon. That has to start playing out like right now, because here's your 1 2, you're in your another 1 2. This should be short lived. This should be maybe over today. Then it should just start gapping up. And then when we get into the danger area, we should get the Fibonacci extension. So that typically means gap and runs in a way we've never seen the market do before. So it would have to be maybe somewhere in March-ish, and then, or somewhere around end of February, and then it's just gap, run, and then we blow through this box. There is no resistance. Essentially, there's no sellers, and it's just people chasing the market, panic buying, that type of thing. So we'll know soon. The market is going to have to decide. This decision is coming sooner than we think, but when it happens, we'll be prepared. We'll be prepared because the selling that comes from it could create a lot of great opportunities for investment, long-term investment when this happens. Again, it could either do this or that, depending on things, the nature of the wave. And yes, there's a few bears out there that want this, right? Yeah, something to like 6,000. I mean, to me, the only viable scenario to get that kind of drop would be like nuclear war breaks out, or some calamity, that natural disaster, that just is unforeseen. Something, it has to be something like that. It just isn't. You're not going to get if you think you're going to get a technical sell-off that does this, you guys are smoking crack. There's no way that will happen. You'll have to have a massive news to get this. So if you're following people that are saying this is going to happen, I mean, guys, come on, man. I mean, do you really think that's going to happen? It can't. It's just not going to, unless you have that event. So the market's going to find it tough to just do what I have here, but it may happen. It may happen, but moon boy's not eliminated, so you're going to have to do what's best for you, and either position for that potential outcome, or you watch it, and you have to just watch from the sidelines, and place your bets where you think it's going to go. So that anyway. I think that's all. Also watch the Hang Seng, right? If we break the October low, that could also tip the hand that the moon boy scenario is negated. I think if the Hang Seng breaks that and creates sequences lower, which it will do that once that happens, I think it's safe to say moon boy is eliminated, because there's no way the market can moon without China, market collapsing, which is what this chart is showing. Especially if we break that massive pivot here, October 22 lows, because if it breaks it, most likely all the other indices will eventually break it too. It's just kind of my thinking. But if it's supported, and we do get some surprise from China, China stimulus or whatever it may be, that could support the world markets, and that could create your moon boy scenario that people think is impossible. So anyway, guys, that's all I've got. Good luck. Talk to you later.